Okay, so you want to start a supercar rental business. Buy a Lamborghini, buy a Ferrari, rent them out to bachelor parties and Instagram influencers for $1,000 a day, and watch the cash roll in. It sounds like one of the most glamorous businesses imaginable. Here's the thing. Underneath the glossy paint jobs and the roaring engines sits one of the most financially brutal business models in the entire automotive world. And understanding why reveals a genuinely fascinating case study in high risk, high reward entrepreneurship.
Let's start with the entry cost, because this is where most aspiring supercar rental owners get their first reality check. A single Lamborghini Huracan can cost $250,000 or more. A Ferrari 488 lands in a similar range. Even a budget supercar fleet vehicle, something like a Nissan GTR or a Porsche 911 Turbo, still runs well over $100,000. Now, here's the thing about running a rental business. You can't operate with just one car. Customers want variety, they want options. They want to choose between the Lambo and the Ferrari and the McLaren depending on their mood and their budget. A genuinely competitive supercar rental fleet typically needs at least 5 to 8 vehicles just to look credible to customers browsing online. Do the math on that. You're looking at $1 to $2 million in vehicle acquisition costs before you've rented out a single car.
Let's talk about financing, because almost nobody pays cash for a fleet like this. Most supercar rental operators finance their vehicles through specialized exotic car lenders, since traditional banks are often hesitant to finance vehicles this expensive and this volatile in value. These specialized loans typically carry higher interest rates than standard auto loans, sometimes significantly higher, because lenders recognize the elevated risk profile of financing vehicles that depreciate unpredictably and get driven hard by renters who don't own them. Now, here's where the real financial pressure starts to build: insurance. This is genuinely the single biggest hidden cost in this entire business, and it catches almost every new operator off guard. Insuring a fleet of exotic cars for commercial rental use is extraordinarily expensive, often costing tens of thousands of dollars per vehicle per year. Why so high? Because insurance companies know exactly what happens when you hand the keys to a $400,000 supercar to someone who's never driven anything with more than 300 horsepower before. Accident rates for rental supercars are dramatically higher than for privately owned ones, and repair costs on exotic vehicles are astronomical, since parts often need to be shipped internationally, and only specialized mechanics are qualified to work on them. Let's put real numbers on this to make it concrete. Say you own a fleet of 6 supercars with an average value of $200,000 each. That's $1.2 million in vehicles. Insurance alone might run you somewhere between $15,000 and $25,000 per vehicle annually for commercial exotic rental coverage, which means you're looking at roughly $125,000 a year just in insurance premiums before you've paid for a single oil change. Now, let's talk about where the revenue actually comes from, because the daily rental rates genuinely sound impressive on paper. A Lamborghini Huracan might rent for $800 to $1,500 per day, depending on your market and the season. A Ferrari might command similar rates. On a good weekend, a single supercar might generate $3,000 or $4,000 in gross rental revenue. That sounds incredible until you start subtracting the actual costs of running this business. Here's the brutal math that most people don't see coming. Utilization rate, meaning the percentage of days a car is actually rented out versus sitting idle in a garage, is genuinely the make or break metric in this entire business. Industry data suggests that even successful supercar rental operations often only achieve utilization rates somewhere between 30 and 50%. That means for roughly half the days in a year or more, that expensive supercar is sitting in a garage, generating zero revenue while still accumulating depreciation, insurance costs, and financing payments every single day. Let's actually run the numbers on a single vehicle to see how tight the margins really are. Say you own one Lamborghini Huracan that costs $250,000, financed at a specialized exotic auto loan rate. Your monthly loan payment might run around $1,500. Insurance for that single vehicle might cost $1,500 to $2,000 monthly when averaged out. Maintenance on a supercar is dramatically more expensive than on a normal car, since routine services that might cost $200 on a Toyota can cost $1,500 or more on a Lamborghini. And that's before factoring in the inevitable accident repairs, tire replacements, which can run several $1,000s for a single set of specialized performance tires, and depreciation, which erodes the vehicle's resale value steadily every single month, regardless of how carefully it's maintained. Add all that up, and you're looking at total monthly carrying costs somewhere in the range of $8,000 to $10,000 for a single vehicle, before you've even accounted for marketing, staffing, or the physical garage space to store and display the fleet. If that car rents for $1,000 a day, you'd need to rent it out roughly 8 to 10 days a month just to break even. At a 40% utilization rate, which is honestly on the optimistic end for this industry, you're renting it out roughly 12 days a month. That leaves a thin margin of profit, maybe $2,000 a month per vehicle, assuming absolutely nothing goes wrong. But here's the thing about supercars. Something almost always goes wrong eventually. Let's talk about damage, because this is genuinely where fortunes get made or lost in this business. Renters are, by definition, driving a car they don't own, often for the first time, often showing off for friends or cameras, often pushing the vehicle harder than its actual owner ever would. Minor damage, curb rash on expensive wheels, interior stains, small dings, happens constantly and eats directly into profit margins. But the real risk is catastrophic damage or total loss. A supercar involved in a serious accident can rack up repair bills exceeding $50,000, sometimes more. And even after insurance covers the bulk of that cost, the deductible alone can wipe out months of accumulated profit from that single vehicle instantly. This is exactly why most legitimate supercar rental operations require enormous security deposits, often $5,000 to $10,000 per rental, held on the renter's credit card as protection. It's also why many operators require proof of a genuinely excellent driving record, sometimes even requiring renters to complete a supervised test drive before handing over the keys unsupervised. These aren't arbitrary hoops designed to annoy customers. They're direct responses to a business model where a single bad renter can genuinely threaten the financial viability of the entire operation. Now let's talk about depreciation, because supercars behave very differently in this regard than normal vehicles, and it genuinely surprises a lot of new operators. Unlike a classic car that might appreciate over decades, most modern supercars depreciate steadily, sometimes even faster than ordinary vehicles, because rental use adds excessive mileage and wear that seriously damages resale value. A Lamborghini with 30,000 rental miles on it, accumulated over just 2 or 3 years of active rental use, sells for dramatically less than a privately owned Lamborghini with the same age but a fraction of the mileage, because buyers specifically avoid vehicles with known rental histories, fearing exactly the kind of hard driving and inconsistent maintenance that rental use implies. This creates a genuinely tricky balancing act for operators. Rent the car aggressively to maximize short-term revenue, and you accelerate depreciation, shortening the vehicle's profitable lifespan in your fleet and reducing what you'll eventually recover when you sell it. Rent it conservatively to preserve resale value, and you sacrifice the rental income you actually need to cover those brutal monthly carrying costs we talked about earlier. Successful operators typically plan to cycle vehicles out of their fleet after roughly 2 to 3 years of active rental use, selling before depreciation and accumulated mileage crater the resale value completely, then reinvesting in fresh inventory to keep the fleet looking current and desirable to customers browsing rental options online. Let's talk about location, because where you operate this business matters enormously, arguably more than almost any other factor. Supercar rental businesses cluster overwhelmingly in specific markets, places like Miami, Las Vegas, Los Angeles, and Dubai, for very specific economic reasons. These cities combine wealthy tourist populations, favorable year-round weather that keeps cars rentable in every season, cultural associations with luxury and excess that make supercar rentals feel like a natural extravagance, and dense concentrations of exactly the kind of high net worth clientele and special occasion spending, bachelor parties, birthdays, wedding photo shoots, that drives this entire industry. Operating a supercar rental business in a smaller market or somewhere with genuinely harsh winters that limit driving season is significantly harder to make profitable because you simply don't have enough consistent demand to hit those already challenging utilization rate targets we discussed earlier. This is exactly why you rarely see standalone supercar rental operations thriving outside of these specific glamour markets. The business model genuinely requires geographic concentration of wealthy, event driven demand to have any real chance at sustainable profitability. Now, here's a concept that deserves real attention because it's genuinely one of the more clever revenue strategies operators have developed over time. It's called the experience economy layer, and it goes well beyond simply handing someone keys for 24 hours. Smart operators bundle their supercar rentals with photography packages, professional chauffeur services for special events, curated driving experience tours through scenic routes, and partnerships with luxury hotels and event planners who refer clients directly. These add on services often carry significantly higher margins than the base rental itself because you're no longer just renting a depreciating asset, you're selling an experience, a status symbol, a specific memory someone wants to create for a wedding, a birthday, or a milestone celebration. And people will pay a genuine premium for that emotional value on top of the base rental cost. Let's talk about who actually succeeds in this business long term, because it's a smaller group than you might initially assume. It's rarely the operators who simply love supercars and want an excuse to own several of them. It's the operators who treat this fundamentally as a fleet management and risk mitigation business first, with the exotic cars themselves being almost secondary to the underlying operational discipline. Successful operators obsess over utilization rate optimization, constantly adjusting pricing based on seasonal demand patterns and local event calendars. They negotiate aggressively with insurance providers and maintain genuinely excellent claims histories to keep premiums manageable over time. They screen renters meticulously, sometimes turning away significant potential revenue from renters who simply don't meet their risk criteria, because one catastrophic incident can genuinely erase an entire year of carefully accumulated profit. There's also a psychological trap that catches a lot of new entrants, specifically drawn to this particular industry. They assume that because supercars command incredibly high daily rental rates compared to ordinary cars, the business must be enormously profitable almost by default. But high revenue per transaction doesn't automatically translate into high profit margins when your underlying costs, insurance, financing, maintenance, and accelerated depreciation are all scaling up in direct proportion to that same expensive inventory. A better mental model treats supercar rental less like a straightforward car rental business and much more like operating a fleet of extremely expensive, extremely fragile, high maintenance racehorses that occasionally need to generate enough income to justify their own genuinely enormous upkeep costs. Let's talk about what happens when this business model breaks down, because it genuinely does happen with some regularity in this particular corner of the industry. Economic downturns hit supercar rentals especially hard because rentals in this space are almost entirely discretionary luxury spending, the very first category of spending that gets cut when people tighten their household budgets during uncertain economic times. Unlike, say, standard rental cars that people genuinely need for practical business or personal travel, virtually nobody actually needs a Lamborghini rental to survive their week. When travel demand or luxury spending contracts during a recession, supercar rental utilization rates can collapse dramatically, sometimes falling well below already thin break-even thresholds for months at a stretch. While those brutal fixed costs, insurance premiums, loan payments, storage fees, keep accumulating regardless of whether any cars are actually being rented out that particular week. Fraud and identity theft represent another genuinely serious risk specific to this particular industry that most people never consider. Because supercar rentals involve extremely high value transactions and attract a certain type of high risk renter profile, operators occasionally encounter sophisticated fraud schemes, stolen identities used for rentals, renters who deliberately damage vehicles and then dispute charges through their credit card company, or straightforward theft, where a rented supercar simply disappears entirely and is never recovered or seen again. These incidents, while genuinely rare in the grand scheme of daily operations, can be financially devastating when they do occur, precisely because the underlying asset values involved are so extraordinarily high compared to a standard rental car. Let's talk about what a genuinely well run supercar rental operation actually looks like at the operational level. It maintains meticulous, detailed records on every single vehicle, tracking maintenance history, mileage accumulation, and accident history with genuine precision. It builds real, ongoing relationships with specialized exotic car insurance brokers who deeply understand this particular niche, rather than simply accepting whatever generic commercial policy a standard insurance agent happens to offer without specialization. It maintains meaningful cash reserves specifically to absorb the inevitable unexpected repair costs and periods of genuinely low utilization that are simply an unavoidable structural part of this particular business model. And critically, it diversifies its fleet strategically across multiple price points, mixing genuinely aspirational, headline grabbing vehicles like a Lamborghini or Ferrari with slightly more accessible options like a Porsche 911 or Corvette, capturing a meaningfully broader range of customers and price sensitivity rather than depending entirely on only the very top end of the exotic car market. At the highest level, successful supercar rental businesses have quietly become something closer to sophisticated risk management and experiential luxury operations that happen to use extremely expensive automobiles as their primary product offering. The cars themselves, gorgeous, loud, and undeniably exciting as they are genuinely just the visible surface of an operation built on careful insurance negotiation, disciplined utilization rate optimization, and a real structural understanding of exactly how fast these particular depreciating assets lose their value under demanding rental use conditions. And that's really the punchline here. Renting out a Lamborghini for a wild weekend feels like the ultimate glamorous business, all roaring engines, exotic paint jobs, and the kind of dazzling Instagram content that practically markets itself for free. But underneath that flashy, undeniably exciting exterior sits one of the most financially unforgiving business models in the entire automotive industry, built on razor thin utilization targets, absolutely brutal insurance costs, and asset depreciation that moves faster than almost any other category of vehicle ownership. The cars might look like pure fun. The spreadsheet quietly running behind them absolutely is not.